Wayne, it was a pretty indifferent day today on the markets after yesterday's
Yeah, yesterday
run.
was so strong it was a little bit indifferent. I mean, the only real sector to suffer a bit, and admittedly that's after a very strong run yesterday with the banking sector. And it's quite strange because overseas the banks are up, but I think it was the rand weakening a little bit. I mean, the rand started the day at 8.30, it's ending the day at 8.38, 8.39 now. So a little bit of profit taking, I would think, and rand weakness negatively affected the banks.
One of the, I think, most interesting things out today, of course, was the SAPI results.
Yes.
Own admission, worst results ever.
Look, unfortunately, SAPI just continues to under-deliver on their quarterly results. You know, whenever something comes out, there's a problem. And this problem, I mean, it's not related directly to SAPI. Everyone's suffering from this. Volumes were down massively. I mean, they had huge volume reductions. They've reacted. They've closed production. You know,
Yeah,
they've
there's a lot
closed
of cuts and they've
huge
laid
amounts of
off a lot of
production
people.
cuts.
Yeah.
And they've made, as we all know, they made this big acquisition in Europe, and they did a rights issue at a steep discount to the share price. Now, having said that, you've always got to look at what's in the current share price. Now, SAPI has rallied hugely from a very, very low base.
Yesterday was 10%.
It was 10%, so it was down 5 today, but it only wiped out half of yesterday's
Right.
losses. And the markets had the whole day to look at these results. It's not as though they came out just as the market closed. So that reflection of -5 is probably adequately encapsulates what's actually in the results. So a lot of the bad news was already in the share price, and as I said, this price has rallied up from 18 or 17 odd rand, I can't quite remember. SAPI is one of these very, very risky shares. I mean, you're either going to make a true fortune out of it, or it is going to sit and just limp along as it has for many, many years.
Right, speaking to Andrew Vincent of RMB earlier, and he was saying, it's so closely tied to the economy.
Yes, it's
the economy
hugely
does
geared.
well, it's great. It doesn't, you're in trouble.
It's very, very geared investors. I mean, they can show fantastic profits if they can get 2% extra margin, if they can push through a gross 5% increase in the prices of paper. Just unfortunately, they are the big players. So when things get bad, they're the ones that suffer the most because they've got to cut production to try and get the stocks right with consumption.